Now, the AmBank Group projects Malaysia's gross domestic product growth to moderate to 4.6% in 2025 compared to the estimated 5% in 2024. Chief economist Firdaus Rosli said the growth will be supported by infrastructure projects, the realization of private investments, and strong private consumption.
For the Malaysian economy, our in-house forecast for 2024, we're looking at 5%. For 2025, we're looking at 4.6 and 4.4 the year later. Inflation, we think that it's going to fall somewhere around 2.5%. Now, there is an upside to that, and we think that it will probably range from 2.5 to 3%. Now, historically, that is pretty much within that range. It's just that last year we saw that inflation came in much lower than what we anticipated in the earlier part of the year.
During a media briefing on the macroeconomic outlook today, Firdaus pointed out that the investment upcycle is already in motion, with gross fixed capital formation experiencing double-digit growth for 2 consecutive quarters through the third quarter of 2024. This surge significantly affected Malaysia's GDP growth acceleration last year. He expects strong investment growth to continue in 2025, supported by technological advancements, infrastructure projects, and initiatives like the new Industrial Master Plan 2030 and the National Energy Transition Roadmap. However, this growth would likely slow compared to 2024. Key projects driving this momentum include the East Coast Rail Link, Pan-Borneo Highway, Nenggiri Hydroelectric Plant, Johor-Singapore Special Economic Zone, and new data centres. In the short term, Firdaus mentioned that Malaysia's exports will receive a temporary boost due to front-loading activities ahead of anticipated tariff implementations, driving growth into early 2025, supported by strong domestic demand. Looking ahead, he cautioned that Malaysia's export performance could face challenges due to higher US tariff.
Trump doesn't really like strong dollar this time around. So it will now it's trending about 108 at the upside of 109 since early January. But we think that it will probably be somewhat lower as we move along. But it will still be around 100 pounds. MGS, we think that the supply of MGS will be around 165 billion this year. And net issuance for MGS is 80 billion, which is pretty much in line with the development expenditure of the government. So that's pretty much what you need to know today.
Additionally, trade headwinds could arise from subdued demand in key export markets like China and the European Union, both grappling with weak economic conditions and rising trade barriers.